But the first company on our radar is Krystal Integrated Services. We have Sanjay Dighe, who's the Chief Executive Officer and whole-time Director at Krystal Integrated Services, who joins in now. We hadn't had a chance to speak about the numbers that came in, the Q3 numbers. So we'll talk a little bit about that. If you remember, the company itself listed on the 21st of March, and it is a facilities management services company. So lots to talk about in that space itself. Thank you for joining us, Sanjay. Pleasure to have you on the channel. If you can just, start by telling us a little bit about the performance, right? If you look at the 9 months of this year, the revenue growth that you've seen was pretty good. 42% growth is what you've seen. However, in the quarter gone by, the margins have declined. So just take us through what the way forward is. What are you expecting to see by the end of FY24? More importantly, in FY25, what is the growth target that you have? And are you expecting to see continued margin pressure in the near term?
Oh, first of all, thank you very much to have me here. It's always a matter of prestige to be invited to speak on CNBC-TV18. Thank you so much. I also want to thank our investors because we went to market on 21st March. And the trust that they have, the way that they have trusted our business and model, I'm really grateful to them. Yes, our numbers, we've continued to grow at a very good pace. And as you said, the margins have slightly dipped, but that is the nature of our business because in order to have our pre-qualifications, we've always acquired businesses which give us a good pre-qualification over the period of time. So it is a nature of our business to build our pre-qualifications. And having said that, the margins are always turn up better over the couple of quarters. So we have a good future in the next year. Even the 31st March 2024, the closing is going to be good. We will continue our growth and better because while we went to the market, we grew at a CAGR of 22%. So we are going to definitely better it post our IPO. And the next... Yeah, you were asking?
Go ahead. Yes. So the next year, what are we looking at in terms of growth for FY25? And if each of the segments, if you can just break it up for us, right? There's facilities management, there's staffing, there's private security, there's catering. In FY25, what will the overall growth be? And in these separate verticals, what are you looking at as sustainable growth?
Oh, good. We will continue to grow at about 35% CAGR even for the next 3 years. And we've grown at 40%. We will continue that space, that speed. Our growth will come from IFMS, predominantly integrated facility management, and even the staffing and security. So all 3 sectors we are completely focused on. And as I had mentioned earlier, also during my other meetings, we have independent focus on all these sectors. So we have independent sales focus, and therefore there is a growth which is going to be happening in all the 3 sectors. The nature of IFMS business is very large, so you tend to get bulk orders in IFMS. So obviously that will continue to remain in the forefront as far as our numbers are concerned. We are seeing a very good 24-25. We will better all our historical numbers in 24-25 and continue that growth. In the spaces that this growth is going to come from is definitely our manufacturing, focus on our manufacturing segment, the SEZ business. There is so much of activity, and you would know better, that is happening in the manufacturing segment. So that is going to give us very good opportunity all across the country.
Okay,
and
got it.
As you also see, we are a very dominant player in the government business with the new projects that the government is coming in airports, railways, and so on and so forth. Even the city maintenance. We will continue to do it.
All right. Good morning, Mr. Dighe, and good to have you on the show. And you're sounding quite confident and optimistic about business. So good on you. And shareholders will be happy who got shares in the IPO because the stock price has done well. Let's focus a little bit on business. Just to reconfirm, you're guiding for at least a 30% growth, revenue growth for the next 3 years from year on. That's right.
Yes.
Got it. And the broad margin number should be in that vicinity of around 7.5 to 8%?
Yeah, the margins will continue in the similar zone. Our entire endeavor is to better the margins as well, because the kind of business that we aspire to acquire has the ability to give us a better margin. So our margin profile is definitely going to increase over the period of time.
Lovely. Got it. All right. Also your staffing business, as a percentage of revenues, it was around 15%. It's gone up to around 30%. Where do you see this number stabilizing at? And I just wanted some further clarity. Is it a better margin business? Because that's the one that's growing at a very fast clip.
Yeah, staffing is also, it is a good business to sum it up in all aspects. Staffing is also going to play a very important role in our progress, because there are companies, there are other departments which want skilled staffing, semi-skilled staffing, and we are going to play a good role in there. And the margin profile in staffing is good, because our staffing business and the staffing proposals that we send out to our prospective customers, they are margin based on a percentage base of in terms of management fees. So they have the ability to give us good margins, and also they have the ability to give us a top line also.
So where does the number stabilize at? From 30%, sir?
So it will be in the similar zone. It will be in the 25 to 30% zone, because we are planning to acquire good business in the staffing segment as well.
Sanjay, hi, morning. Prashant here. On the just to sort of go back to the facilities management, so between, say, is it all sort of office facilities management, or do you do other kinds of business as well? I mean, residential complexes and the like.
Oh, that's a good question. We are not a very dominant player in the residential segment. Having said that, we do a couple of residentials which are high-end, which are niche residences, and that's it. But we don't consciously go behind acquiring residential businesses or townships. Our focus predominantly is much larger infrastructure management, which I have said earlier also, which could be standalone commercial complexes, which could be multi-office oriented commercial complexes. It could be manufacturing units. It could be large, like banks we are doing, like So it is going to be more of a commercial infrastructure. Also railway stations, also airports. We are going to have a good focus on the airports as well, with so much of development happening there. So SEZs, airports, hospitals, recreation centers, there is a lot of activity and consolidation happening in the...
Got it. Sanjay, would you, and that area is booming, no doubt, all those things. But and when you talk about residential, luxury residential projects across towns, cities, etc., that's a space which is booming, right? And people are paying.
Yeah.
So do you think it's an attractive area? Because most of the other side is B2B, and that also pays well. But here, I'm not sure how the economics work. Would you consider making a big push into it? I mean, CBRE and others are big in that area.
Yeah, they are big into that area. Like I said, it is not. We are not going to avoid that sector consciously. We are going to be present there, but we are going to be very choosy when we get into the residential sector, because it has a different dynamics. I don't know if I could say it on the national TV, but residential has a very different dynamics, and dealing with corporates, commercial houses in a commercial way has a different dynamics. They are two very different sectors. And we have our good experience in the sectors that we've been in the last 24 years. And residential has never been a very dominant sector. So we have always, we are very mindful that we will build our skill in the areas that we already know good, and explore that to the hilt. So to answer your question, we will not avoid residential sector, but our focus will be on the sectors that we've been performing well.
Got it. A quick word on your debt. What is the debt on the books currently, and how much do you plan to bring it down by?
Now, from the 175 crores that we raised in the objects, we have retired 10 crores worth of term loan debt, and that was the part of our objective. So that is the only retirement of debt that we are looking at right now.
Okay, what's the total debt on the books?
It was 153 minus, so about 143.
Oh, so you still have 140 crores of debt. All right, Sanjay, we leave it at that.
Yeah.
Yes, go ahead. What were you saying?
To clear our debt profile, because we are almost 70% into government sector, where bank guarantees are important. So our working capital debt is very, very minuscule compared to anything else. Most of these are bank guarantees. So it is non-fund based debt which is more, and working capital debt is very, very less.
Got it. All right, thanks a lot, Sure. Thank you for your time. Have a great weekend. Thanks for joining us on the channel. Well, that's the word coming in from Krystal Integrated, the outlook on their business.